All right, Matt, welcome. Episode number 48 here. It's coming up on a year, annual, celebration. We'll have to do something special for that episode.
Yeah,
So,
although I wonder
yeah,
if it's the one that you're going to be gone. Actually, I haven't done the math, but it seems like you'll be. I think you sent me a date that you're going to be gone two or three,
yeah,
3 or 4 weeks from now. So
yeah. I think it's like
I have to
3 weeks
double
from
check.
now. Yeah, yeah. My special field trip day with my youngest son at school for the whole day that day. Don't want to miss that. So, um, anyway, macro market. Yeah, usually just for people tuning in now who haven't tuned in before, format is this is being live streamed on Twitter Spaces and on YouTube Live on our Good Soil Investment YouTube channel at the same time. And we talk about format as we talk about macro market stuff, and then we talk about Tesla, Elon stuff, and some other stocks that we follow. If there's any news on that, and then we just do Q&A for the last half of it usually. So hope everyone's doing all right. Hope everyone had a good weekend. It was exciting Sunday night. I was like seeing the futures up like 1.5%. I was like, all right, it's gonna be a great. Maybe we have turned the corner and come back. And then, sure enough, it fades away. Yesterday somewhat, and then this morning, I guess some CPI number in Europe, came out that was higher than expected. So put a damper on the markets a bit. That seems to be the narrative we're being told for the macro market slight reversal here. But who knows what the real reason is? Just could be the normal ebbs and flows of markets going up and down. Maybe today's just a consolidation day, a bit of last week's gains, and maybe we're heading back higher later in the week. We'll see. Or we could just have had a short bear market last week and continue a downtrend this week. What are your thoughts, man? Do you have any hunch of what's going on?
Yeah, I mean, the biggest theme I think is obviously just equity markets have been absolutely hammered year to date. To me, what we've seen in the last week or so, it kind of reminds me of the rally we had in late March and into April.
Yeah.
We got slaughtered the first 2.5 months of the year, and then March really turned it around. There was this kind of incredible rally right after that FOMC meeting in March. So it seems like as the downtrend has continued, it's maybe not surprising that we see a couple modest rallies along the way, just to kind of offset the the kind of face ripping downturn that we've seen. But yeah, to me, I the volatility doesn't necessarily surprise me, and I think we probably could go higher or lower from here. But I think a lot of it's just going to depend on macro. I mean, the biggest thing on my horizon, I think, is what does the May preliminary or the May CPI number look like, which we'll find out in a couple of weeks here. So I think when that news comes in, if it's really good, I could see that sparking a pretty considerable rally, and if it's not so good like the last one, then I could see kind of continuing rate fears rating in equity markets kind of continuing on their downturn. So we'll
Yeah.
see.
The third option is we could trade sideways for the whole
Yep.
summer. That's certainly possible. And in that case, if you're an option seller, you're going to do quite well.
Yeah.
But it's
So
risky.
up, down, or
Yeah.
sideways? You guys heard it here first.
Yeah. You guys are. It could be anything. We have no idea. We're very uncertain about the macro market. It's not easy, the macro market. People who try to attach narratives to the macro market, it's easy to tell a story of what caused the macro market to go up or down, but it's very difficult to predict with a story of what the macro market is going to do next. Very difficult. People who can do that should be very wealthy by now, but hardly. I don't think anyone can do that really.
Yeah, that's why I think we tried to have a little bit of humility around this, where we in the past anyways have had some short positions to kind of get us close to delta neutral on macro hedging, and that's worked successfully for a little while. But we also want to be kind of there's more asymmetry on the upside, so we want to in the long term be more
very
long
long.
exposed.
Yeah.
So whether you're not going to time the bottom perfectly is kind of my thought, but with some pricing the way it has been, it seems like there's potentially some opportunities if you've got the long enough time horizon.
Yeah, yeah. And what's interesting is today, I guess Biden called for a meeting with Jerome Powell, and sort of unusual for him to do that. And the timing is conspicuous to me with the midterm elections around the corner, and I voiced my opinion on that, and I kind of think it's because he wants Powell to help stabilize the markets and prevent it from crashing another 20% fast or something in the summer. And if all of a sudden we're down 30 or 40% on the year to date when the midterm elections come, I think the Democrats are going to have a hard time, despite whatever inflation. Inflation is not going to be solved by November, no matter what. So it's going to be like inflation's running hot and the markets are down 40%. That's worse than inflation's running hot, but markets are only down 10%. So which is the worst thing? And I think that's my thought. I know other people have a different read, that Biden is talking to him genuinely about doing what he has to need to do and raise rates faster to curb inflation. I think that's what Biden says, of course, because he's a politician. But his number one priority above everything else is to get reelected, as any politician's number one priority is. Second priority, which is what's best for American people and the economy long term, that's a distant second. So what are your thoughts, Matt? What do you think is going on with this meeting today with Powell and Biden?
Yeah. I mean, I have a very similar viewpoint to you, actually. I mean, as I was listening to somebody, I forget who it was, but somebody put out a comment like, oh, no, like, Biden absolutely respects or wants to preserve the Fed's ability to act independently or something like that. And I'm like, well, all right, well, why even request a meeting then? It just seems so unusual. So to me, the most likely explanation is really that, he does kind of request some sort of toned down language or, something to kind of give a boost to equity markets.
Yeah. Yeah. It seems like he wants some breathing room to, yeah. I mean, the Republicans have been saying all along that Biden's terrible for the market. And, here we are, like Biden 2 years in, the markets are going to be down from where he took over basically pretty soon. And so he's trying to, I think, prevent that kind of card coming out during midterm elections of, we'll see. That's my read. I wonder if there'll be any notes. I'm looking at articles. I don't see what time. If anyone in the comments section, which I haven't been reading carefully enough, knows what time they're meeting, maybe it's sort of behind closed doors and they're not going to talk about it. I'm not sure, but it'd be interesting if there's a time and they talk about it at all.
2:30, but I could be making that up. I saw something was 2:30, but could be the wrong thing.
Yeah. I mean, you got to think that there's got to be some official.
Door real quick. Sorry, somebody
sure.
Here.
Yeah, no worries. Matt's got 6 little kids running around his house, so bear with him.
My son just like busted in here. All of it. I was like, "What are you doing?" We got construction going on too, so I'm really looking forward to moving into the new office eventually. But we'll see. It's been going on forever.
We'll see. Yeah. But it'll be interesting to see what the official statement is they put out about this meeting. I mean, they already let out that they're public. I wonder how many times they actually meet behind closed doors without anyone, the public, even knowing. I wonder if that happens, or if they can't get away with that, and they just, every time they're going to meet unexpectedly or unplanned, they have to just publicize it some way. Do you think that they ever meet, on a bat phone and talk on a bat phone without the public knowing? Do you think like Biden calls up Powell and is like, calm down on the interest rates, man? Do you think he ever does something like that? Or do you think that's not really possible?
I'd like to believe that, that sort of stuff doesn't happen. And, the different branches of the government kind of respect the autonomy of each other. But I just don't think that's how the real world works. I'm sure there are a lot of back channel, interventions of some sort or another, now whether those are, like conspiracy theory level, like breaches of fiduciary duty, or maybe not fiduciary duty, but the responsibilities that each different branch of government has. I'm not necessarily convinced that's the case, but there's some amount of soft power that I think has some sway, or at least has the potential to have some sway. If the president of the United States asks you to do something, I don't care who you are. I think you're going to take that request seriously. Now, whether or not it'll actually change policy, that's definitely debatable, but it has the potential to have an impact.
Yeah, absolutely. I don't know if you heard when I talked to Dave on his channel, I think I mentioned that I had met some lady who claimed to be part of like Trump's executive, committee, or, not an official, like a staff member, but not an official, like high position or whatever, but she was close on the Trump, circle apparently. And she had a friend with her who seemed to corroborate the story too. And it was just an off chance conversation. It's not like she pitched me some idea. I just kind of wiggled my way into discussing this with her and asking her about it. And it appeared she seemed to imply or state that that even after Elon had resigned from the publicly from those councils that Trump was putting together, that Trump and Elon stayed in touch regularly, and Trump would call Elon all the time, and Trump called many people all the time just to ask for input and feedback on things. So maybe maybe the presidents do call various CEOs or Jerome Powell off the record for advice or feedback on things, or to give input. I'm not sure, but I'm not sure if that's true. I think it sort of was true, but we'll see.
Yeah, no, Dave voiced some heavy skepticism that was a kind of legitimate representation from that woman. I'm not sure. To me, it could go either way, but I mean,
yeah, I mean, look at Elon's tweet earlier. You saw a tweet like anytime he admits that anytime anyone mentions the name of who's not to be named, people start foaming at the mouth. And I think Elon recognized that early on. Is like, I better publicly get out of my face attached. And I think Trump probably understood that and was okay with it. Yeah. And they just had behind the scenes discussions. That's my thought. That's my read on the situation.
That's my thought too. But I mean, Elon even said that he voted for Biden. So even if Elon and Trump did have that sort of relationship that woman was talking about, clearly, it wasn't the sort of nefarious thing where, Elon was secretly supporting Trump. I mean, he just stated that he voted for Biden. So, I don't know. I have a hard time, trying to think that there's anything super nefarious going on. But at the same time, you see like what's going on with the GM, and like Elon's been commenting on how like the Democrats are in the pocket of the unions. And that certainly seems to be the case with these kind of continued snubbery that is going, SpaceX and Tesla's way.
Yeah, that's the biggest mistake. We'll stop talking about politics in a second, but the biggest mistake the Democrats have made is not getting Elon on board with them in a better way, especially when the Biden administration took over. That was the biggest mistake. Now there's like the Elon party or the Elon influence, and I put out a tweet like a week or so again, calculating an estimate of how many voters will be swayed from voting Democrat to Republican this midterm election, for example. And it's not marginal. I think it's a very influential amount that is going to change election outcomes this midterm election. And I think you'll see political strategists and pollsters will start recognizing this, and you'll see political strategists advising the Democrats or the Republicans, like, hey, you got to court Elon. You can't demonize him, or it's at this point in his career and his state of influence, you can't. Yeah. You can't just demonize him because he's a billionaire, So
well, it's kind of funny because I remember like 5 years ago to 10 years ago, even, I mean, there were kind of endless attacks from Fox News on Tesla in general, and what a waste of, there was a government loan guarantee program or something that they had, and how like, the EV tax credits were just a waste of money. And like, there was a Tesla death watch essentially from the Republican side of the aisle for the longest time. And it was like those attacks just drove me crazy. And now it's funny because the Democrats are doing the same thing.
Now it's the reverse. Yeah. I remember Romney pushed down Tesla during some of those debates way back. I remember that. And I was like, what the heck? What's this Romney guy talking about? I remember thinking that, like, he like grouped them in with some others that have failed, loans that were failed or whatever.
Yeah, Solyndra, that was a big thing.
Yeah. I see Larry Goldberg's in the comment section saying that the Biden Powell meeting is set for 1:30. I'm assuming that's Eastern time. So that's in about 45 minutes. So we should find out maybe in 2 hours or so some kind of official statement, or maybe 3 hours. I don't know, but I would think we'll find out some kind of official statement or something. I wouldn't be surprised if whatever comes from this meeting moves the markets. I'm not saying it will. I don't think the market's expecting anything to move the markets from this meeting, but I wouldn't be surprised if something comes out that does move the markets, good or bad. More likely good, in my opinion. But we'll have to all watch this closely.
Well, it's been crazy because even like the tiniest bits of news have seemed to move markets like down 3% and then like up 4%. Like it's the volatility is just, I mean, the whole equities market right now just seems like a coiled spring, and it could bust down and it could bust up, but it's almost like it's waiting for something to kind of tell it where to go. And the volatility has been something to behold.
Yeah. Well, let's talk about Tesla now. That's the talk. We had an incredible bull versus bear debate with Drew Dixon. End of last week, we published it like right after we had the debate, basically on Friday afternoon, and it was very popular. It's as viral as any of our recorded interviews have gone. I think it's got over 15,000 views in the first 2 days or something. So it's actually, and it's 90 minutes long. So that's a lot of viewing time for our YouTube channel, which has like 7,000 subscribers. That's pretty good. And I think it was a really well done interview. Drew has a lot of great points. He's very sophisticated, knows what he's talking about. If anyone's on here hasn't listened to it yet, highly recommended. You know, if you go on a walk or whatever, or in a car, it's great. 90 minutes. You can listen. Anyone listening to me, I always recommend 1.5 speed. I'm kind of a slow talker, but Matt and Drew, let them speak for themselves. But I think listening to those interviews, yeah, 2x or 1.5.
45 minutes. That's what I do.
Yeah, you get it done much faster, and you can absorb it. Yeah, if you're paying attention. So, what were your thoughts about the interview, Matt? Did it change anything did it change anything materially that you can talk about here on your view?
So even before the interview, I would say the one kind of data point I've been watching to see if there is any change in it would be lead times, because if the economy really is weakening, there is a potential that demand, which has not been a problem for the last several years, could become a problem. Just selling $60,000 cars in the middle of a recession, it's conceivable, I think, that could become a problem. So he kind of hinted at that a little bit, and that's in my mind a concern, but it wasn't necessarily a new concern. The one that I hadn't really given a whole lot of credit to potentially was the importance of having many different models. So he was talking about how the market is kind of segmented into all these different brands and different vehicle types, and so Tesla right now has the Model S, the Model X, which are high end luxury sedan and SUV, and then the crossover with the Model Y and the smaller form Model 3. So those are they've got like one entrant in each category, and there's very little kind of differentiation possible within those options. So they've been incredibly successful with those vehicles to date. Obviously, I mean, I don't think anyone can say that they have not been successful, but his comments did get me thinking, okay, when you're talking about selling 10 million units, when you're talking about selling 20 million units, at least in the scenario where autonomy is not solved, I think there's a pretty reasonable case to be made there that they may need some differentiation and more vehicles. So you're probably not going to sell like 10 million Model Ys and 5 million Model 3s, for example. Like that's just very hard to conceive that those two vehicles could sell in those quantities. So that was one thing that maybe got me thinking that it may be important for Tesla to kind of continue developing like the Tesla minivan that Elon has talked about, or like the full conversion van. A couple other different form factors may be helpful as well. So that was, I think, the biggest point I took away that I hadn't really thought through in detail. But I'm curious, what about you? Is there anything that kind of changed your opinions or got you thinking in a different way?
I would say there was no new information that I hadn't heard before, but I would say his stance on writing down what you think will make you change your mind was important, and something I in my mind I keep these things, but instead I decided to write it down. I even wrote it back in an email to him last night, a postmortem on his postmortem. What will change my mind? Because I think it's important to write down what will change my mind about Tesla, instead of just thinking in my head or talking about it, which I can easily make it a moving goalpost. Then if I actually write it down, you can put it on a piece of paper and tape it up on your desk or whatever, or write it down in an email that you can go back to. I thought that was a good point to make. Like, if you are in love with a stock, write down what would make you change your mind about that stock to not be so in love with it. And so I wrote down, I said, if I hear of test drives in the media, as we all know, that's a lot of bunk, usually anything in the media or car and driver, or even Consumer Reports these days has it in for Tesla for, a number of potential reasons. But, if I personally test drive another EV that has at least a comparable experience for driving to a Tesla, but also software. And that's the hard part, I think.
Yeah.
So if I have another EV that I can personally test drive that's comparable in driving and software, and that includes the autopilot capabilities on highways and the potential for full self-driving capabilities, that includes that as well, not just the touch screen and how easy it is to use and manipulate with my phone or, connection to my phone, but includes that. And if I think that company can mass produce that EV, it's not just some prototype, they're producing at a big loss and they can't mass produce it, because I think someone might even be able to it's hard enough to do that alone. But even if a company can figure that out with a prototype, very expensive prototype. That's a whole nother ballgame than versus being able to mass produce that type of experience in an EV, in an efficient way. So I have to also believe that that manufacturer can mass produce it in somewhat of an efficient way with some positive gross margins within a couple of years from that time I test drive it. And I think that the only possible player, the most likely player to potentially reach that is the Chinese EV player. And that's why we keep a close eye on XPeng, Neo, Li Automotive, and others. BYD, to some extent, I don't know about, they're great at batteries, but I'm not sure they have the technology side locked down or the software side. But some of these other newer EV players in China that have gotten off the ground and seem to be producing tons of cars, those are the ones I keep a close eye on. And if one of those started exporting anything meaningfully, and I could test drive it, more than like a couple thousand cars, if they're exporting like tens of thousands of cars, a quarter, then I would certainly catch my attention. I'd want to test drive it. And if I felt like it was very comparable, then I'd have to really dig deep on potentially shutting down some of my Tesla, not shutting down, but, taking off some of my Tesla position.
Yeah. I mean, investing in general at a very high level is about, finding the best kind of risk reward combination out there. And so I think in that scenario that you outlined, it's not that you wouldn't think Tesla has a bright future, but you may have other stocks in your portfolio which then look like they've got better risk reward profiles, and so you may just kind of rebalance for those reasons, which I think is a very natural thing to do. I mean, one of the other things we touched on towards the end of the interview was just how there's a good chunk of the Tesla community, I think, which is kind of in this mentality of just like hodl until 2030 or later, and sell at 10,000 whenever it is that Tesla reaches like 10,000 a share or something like that. And like, I kind of get that inclination, and I do kind of identify it with it, because I think it's kind of like a somewhat likely scenario given a long enough time frame. But I do think along the way, it's important to kind of check in and feel like, okay, are things progressing the way that I thought they would in order to get to that future, $10,000 share price that I have in my mind. I think if you're not doing those checks along the way, you're opening the door for you to get blindsided, and if the company really does have a big misstep of some sort. So I think it's important not to be kind of missionary about any name in your portfolio, as much as you may love the company, like we clearly do with Tesla.
Yeah. I think of it as like, try my hardest not to think in a binary way, think probabilistically, always take in new information to reevaluate my probabilities of scenario outcomes personally, and just keep tabs on that at all times. Don't think Tesla's going to be the biggest company in the world no matter what, which I do think is likely. I still think it's highly probable, but it's not 100%, and I'm always taking in new information to see something changes. It's possible Google DeepMind AI does something incredible before anyone else, and Kathy Wood, is on the ball with the, consumption going up, with the GDP going up 30 to 50% a year because of some crazy DeepMind AI breakthrough, and now Google's going to be the biggest company in the world, and for a long time before Tesla can get there or something. That's possible, but I still think Tesla's going to be highly successful, and we're always just looking for ways to shoot down our argument. So it was great chatting with Drew, and we talked to him. It was 90 minutes, but we could have gone for 900 minutes. There's lots of things we could have talked about. We missed. So
there were a whole lot areas that we didn't really even get into. And one of the common comments I saw was that neither side really gave their price targets, or their valuation, which is, I kind of regret it in retrospect, because we did kind of bill it as a valuation debate, but I think we ended up having a valuation debate in a lot of the emails leading up to it instead of on camera.
Yeah.
So
I think in a tweet
to that in a little bit more detail.
Yeah, I think Drew in a tweet reply follow up to someone said like he has $100 price. Maybe going into it, I don't know. That's something like that, something around that 100 billion market cap valuation or something. I could be wrong, but I thought that already mentioned. Yeah.
But he also, one of the things, just piecing together, he said was he thought a 50 PE kind of made sense. So he didn't specify whether he thought that'd be trailing or forward. I mean, to me, it seems more likely that you'd have a forward PE of 50 than a trailing. But assuming, he did have a 50, PE, I don't know what the trailing earnings is right now, somewhere close to like $9, I would guess, something like that. So that'd be 450 stock price, somewhere in that neighborhood. So I don't think he thinks it should be trading at 100, but I think his forward view could be that margins get compressed going forward. my take is he does not believe margins are sustainable. So
Yeah,
maybe,
that's what I think.
yeah.
He said margins are. That's one of the things that would change his mind if margins were sustaining as volumes increased, or maybe margins improved. That could change his mind too. So it's good that he wrote down, or he listed some points that he would reevaluate his position of being a bear on it. And yeah, it'll be great to talk with him again in maybe 6 months or so and see what has changed or what has not changed in his viewpoint and ours. Yeah. So yeah, next thing is Matt, you mentioned something on one of, well, first I guess Shanghai's reopening is a big deal. It's I guess officially Shanghai's like really reopening starting tomorrow or
Yeah,
probably
June
today already in
1st.
China. Yeah. And and so they're putting in all these incentives, government incentives, to try to like spur growth again. And I guess Tesla Shanghai is going to be 100% soon, or is supposed to be. It's 70% already. But what are your thoughts on that? Have you read much about that, or what do you think?
Yeah, I mean, there was that visit that one of the Wall Street analysts had in Fremont earlier this week. I forget who it was. Maybe it was Wedbush or something. But
Yeah, and
um,
Mizuho, I think, just had something out about that too. Yeah.
so they put a note together, what they were saying is one of the constraints right now, aside from just like the Shanghai shutdown, which is lifting, is the ability to get supply in. So it's not only about how fast Shanghai can ramp, but it's also how fast can the other suppliers get in there. So I think that the number that they put out there was they were expecting 250 to 260,000 units this quarter, which is really, I think, right in the wheelhouse of what you and I and most of the kind of well-informed bulls have been expecting for a while now. So didn't necessarily change the story too much, but I think it's maybe just important to keep in mind that it's not only about Shanghai kind of lifting restrictions. There's also the need for the other suppliers throughout the
Yeah.
Chinese supply chain to get up and running, get those parts actually delivered.
Yeah, and that's a big deal also for downstream supply inventory, problems with the whole U.S. market and in causes of inflation, I think, or inflationary shock. So it's good that Shanghai and China is kind of getting back to full speed quick now after 2 months of shutdown, because the longer they were in that mode, I feel like the longer it could cause ripple effects in the world economy, especially the U.S. and put more stress on our economy in terms of inflation and such. So I think that's really a good sign for macro markets too in general, not just Tesla. And I saw you put a tweet out about the Model 3 leases expiring coming up. That's an interesting point you bring up, and we've talked about it or touched on it before. You did some more analysis. You think it could be up to like $200 million of incremental margins this quarter. Is that right?
Yeah, so that's my kind of back of the envelope napkin math. And maybe for those who didn't see the thread at a high level, 3 years ago this quarter, so Q2 of 2019, Tesla introduced the Model 3 lease program. And the really unique thing about it was they did not allow for the lessees to have the option to buy back the vehicle at the end of the lease, at least not at a predetermined price. I've heard some reports that Tesla is letting them buy it out now, but presumably that would be at current market values, not at what would be the residual values that Tesla would have booked at the time that the lease went into effect. So maybe just a quick summary of the accounting behind this. When Tesla leases these vehicles, so Tesla owns the vehicles themselves, and they are essentially letting the lessee make use of the vehicle. So Tesla, when it enters into a lease, puts the book value of the vehicle on their balance sheet, and then kind of depreciates that over time to a set residual value. I was doing some poking around, and it looks like most vehicles, or most leasing companies out there, you would use like a 50% book value at the time the lease is entered into. So in other words, let's say back in 2019, Tesla sold these vehicles, just to make the math easy, at $50,000. Well, then they would have a assumed residual value of 50% of that, so $25,000. Which they would depreciate those vehicles up to that, or down to that level essentially. So now, if that accounting has run through for 3 years, then Tesla has a bunch of vehicles sitting on its book for $25,000. But if you look at the actual market prices for 2019 Model 3s, it's more like $55,000, $60,000.
Yeah.
Especially one sold by Tesla, because Tesla attaches full self-driving to these. So my point was that they could be sitting on a gain of, $25,000 to $30,000 somewhere in that neighborhood per vehicle, that, you know, this would be a new source of margin because the leasing program is just kind of getting to that end of 3-year period right now. And so, you know, my estimate was it could be, you know, around $200 million this quarter. But then this is, keep in mind, this was during the Model 3 ramp. So this is like the smallest amount of margin that we could see from this, you know, lease vehicles coming off lease. And it would presumably increase from here, kind of mirroring the exponential ramp of Model 3 years ago. So just another kind of tailwind. I mean, $200 million is a lot, but it's kind of is like the plus or minus error of credits. So it's not, you know, it's roughly 20 cents per share in earnings. And there's a good possibility that my numbers were wrong in some way. So maybe it's only, you know, 100 million or something like that. But I think the point is, it's just another kind of tailwind that I think a lot of analysts are not contemplating. So if I'm right about this, we'll see a pretty big bump in services gross margin this quarter.
Yeah, I mean, I think that's very likely, and it's going to get even more so each quarter going forward, right? I mean, there's going to be more as they ramped up their Model 3s. There's going to be a higher, if this turns out to be true, you know, next quarter could be, you know, you just have to look at how many Model 3s they sold 3 years prior, right? And you just kind of can do the math and see how much it could grow, right?
Yeah, I mean, the kind of crazy thing is, I think it was like 77,000 Model 3s were sold last, or in Q3 of 2019, which seems like such a small number. It's kind of funny going back through and being like, yeah, I remember being impressed by that number 3 years ago, and now it's like, wow, that's cute, you know, 77,000. So yeah, thinking about like 3 years from now when they're selling, you know, between Model 3 and Model Y, and a portion of those are leased, and you know, looking at, I'm sure the accounting policies probably have not changed too drastically, because, you know, accountants tend to want to be conservative. You know, they don't want to have the potential for a markdown. That's a lot worse than, you know, having a gain 3 years from now. So there's potential that, you know, Tesla's whole balance sheet is kind of, or at least that this vehicles sold under operating lease line item under the assets is significantly undervalued.
Yeah, absolutely. And what percentage of the Model 3s have been leased historically? Is it pretty constant, or was it more earlier on, or more? Do you know?
It was, so I think they didn't break it out in Q2 of 19. If my memory is right, in Q3 they did, and it was something like 9%. I think it spiked as high as maybe 15 or low teens. But then most recently, I think it's come back down closer to 7 or 8. So I mean, it was never a huge percentage, but just on, even if you assume towards the low end, you assume it's only 7% or so, but it's you know, ramping so much over time. I mean, it's a huge potential tailwind that's just going to grow. And then, I mean, the reason they did this in the first place was so they could own their own robotaxi fleet. So if they do somehow solve that, then the margin potential is going to be even higher, because they've got all these vehicles on their books for, you know, $20,000, $25,000 or so. And
it's almost like another phantom asset that Wall Street analysts have no way to really model, right? I mean, you have the phantom asset we've talked about of the credits that no one seems to model or be able to value. This is almost another phantom asset of like how much extra they're going to make on these leases that they're expiring, I guess, right? And Wall Street analysts aren't even accounting for it in their numbers.
Exactly. Yeah. I mean, I've never seen any Wall Street analyst talk about this, but yeah, I mean, Tesla did something super unique 3 years ago of saying, we're not going to give you the option to buy this. We're going to, you know, take that risk and that opportunity ourselves. And lo and behold, that was 100% the right move. But I remember them kind of getting ridiculed at the time. But yeah, to your point, it is like a phantom asset, because this is one of the things that drives me crazy about accounting, is that it, like in this instance, for example, it doesn't give you the right answer. It doesn't give you the actual value of the asset. It just has some weird restriction on it. So all the people looking at Tesla's financials don't realize that the number on their balance sheet is too low. Just like it is with the regulatory credits, because they don't even go on the balance sheet, which is stupid in my mind. So it's just like some of the accounting rules are so dumb. Like Bitcoin, for example, Bitcoin on the balance sheet can only go down in value. It can never go up. I was like, that's dumb.
That's so
like
ridiculous.
That's not a helpful accounting policy. So there's a lot of these accounting policies just drive me nuts, because like you need to like have spent a lot of time looking at this stuff, like I have, to really uncover these little nuggets, and it should be more accessible to everybody. So it's frustrating.
Absolutely. Yeah, it reminds me of way back, I think in like 2013 or 2014 when the Model S was first kind of growing. There was all this FUD about, oh, Teslas will never resell, the batteries are going to run out, and then Elon stepped in to personally guarantee, not off the company, but he said he's going to personally guarantee from his wealth that they can buy back, that you could sell back your Model S or trade it back in, or it'll be worth at least like 60% of its value after 3 years or something. Similar to what the top luxury cars were getting in value after 3 years of ownership. So he was personally guaranteeing it, and lo and behold, years later, 3 or 4 years later, it was well over 60% in value. You could sell your Model 3 for at the time. Same thing with the Model S. Same thing the Model 3s. People didn't, people just assumed the worst, or they're afraid, like, oh, the Model 3, what if something happens, going to be worth a lot less or whatever. But there's Tesla saying, hey, we're going to make sure we'll let you lease it, but we're going to take away your ability to buy it from us later because we're so confident that we can do really well with the resale values later. So
Yeah, definitely. And a little side tangent on that, I had a conversation with Florian Minderop, who is the founder of Mr. Green, that Dutch EV leasing company. So they own a fleet of 4,000 Teslas. They're an
wow,
incredibly interesting
4,000. That's huge.
4,000, and they're
That's
trying
a
to
week's
grow
production in
50.
Fremont or something. Yeah.
Yeah, but so they've been doing leases of only Teslas in the Netherlands and a couple other places within Germany for a while now, and so their financing partners follow the same kind of lease accounting where they will only give them financing essentially following the depreciation models for ICE vehicles. So they've got all these like vehicles coming off of lease that are on their balance sheet for like a really low amount of money because that's what they had to do to follow the accounting. And then they're just sticking them into a second lease, which like their financing partners didn't think they'd be able to do. And like the accounting, is like we were saying, undervaluing those assets on their balance sheet. And so they're getting an entire second lease at pretty much the same pricing out of these vehicles. And then they're attaching full self-driving to it as well, with as many customers as they can, in the hopes of developing a robo-taxi fleet. So like, they're another company who's kind of taking advantage of this, and they're seeing kind of the financial benefits of the longevity of these assets, of these vehicles that last just frankly way longer than their, internal combustion engine counterparts.
Yeah. It's
And
incredible.
just another interesting tidbit from that conversation, because I know a lot of people didn't watch it, but they've been essentially subsidizing full self-driving a little bit. They're selling it for between 30 and 80 euros per month. But with that, they're seeing a take rate of 35%, which was kind of surprising to me.
Wow.
In Europe in particular, which doesn't have beta, which
That's
doesn't have
high
a lot
take rate.
of
Yeah.
functionality that we have here. Yeah,
That's crazy.
And they said just last month it was 50% actually.
What?
So
Wow.
he thinks that take rates actually been increasing based on what they've been seeing, because they're not really doing anything different, but they're noticing take rates going up.
That's a fascinating data point to show. Yeah, tweet that interview out if you can after our chat. I didn't see it. I want to listen to it for sure.
Yeah,
So,
I tweeted out last week. I'll tweet
maybe
it
I
again
missed
here.
it. Yeah, I feel like if I don't look at my Twitter in like 12 hours, I miss some tweets because it only like caches the last several hours or something. I don't know. But there's like apps you can get to keep it all stored. I just try to keep my whoever I follow to a minimum amount where I can continue to. But anyway, I missed it. So let's move on quickly to Twitter and Elon, and then we'll go to Q&A. So just briefly, Elon tweeted a kind of a meme about letting a Twitter bird out of a bird cage, and it's flying away. My take, I had two takes. I think like it could be that, he's opening up, unlocking Twitter and the free speech capabilities and unlocking lots of value at Twitter. He's going to unleash the potential of Twitter when he takes it over. Or it could mean like, I thought, like, if you love something, you let it fly away, and let's see if it comes back to you, And he loves Twitter, clearly. I think he loves the potential, at least, of Twitter. And it could be like he's letting the offer fly away, like he's giving up and he's sticking to his guns on a lower value that they're not taking at the moment. And he's going to say no deal, and he's kind of letting them decide if they're going to come back to him and agree to it or not. So I wasn't sure. Those are the two takes I had. Did you think one way or the other, or what do you think?
I tended to think more that he wanted to let Twitter fly, as in like get it out of the cage that Parag and company had put it in. So I think he still wants to go forward with it, and he kind of views himself as the one that's opening the cage door and letting it fly. So
I hope so.
I could be wrong, but that's the way it struck me.
Yeah, I hope so. Yeah, there's Unusual Whales just tweeted this morning that a global cybersecurity company, CHEQ is the stock ticker symbol. I forget the company name. It's a global cybersecurity firm, did its own analysis on Twitter, and 11.71% of all Twitter visits were driven by bots, fake users, or spam bots or botnets, clip farms, automation tools, and other forms of fake, fraudulent, non-human traffic. So instead of 5%, it's pretty much analysis says it's 120% higher or 140% higher than what Twitter is saying at 5%. So at 11.71%, that's pretty material. I wonder if that metric can be used in terms of trying to negotiate in a court to negotiate a better price.
Yeah, I mean, it's not the order of magnitude like Elon was talking about, where he thought it could be as high as 50% or even more. Which, to be honest, that seemed high to me.
It seemed high, not impossible, but high.
Not impossible, but I would like if I was ballparking, I would say like 20% or so.
That's what I would say.
This 11.7% figure, like that's like to me,
possible.
Both parties could probably move forward with that, right? Maybe you take a little haircut to the price, and both parties can agree not to let like the litigation fly. I think there's a serious risk that there's like pretty heavy litigation coming out of the way that this has been handled, probably on both sides. So I think that they'd probably want to avoid that. And so maybe you could cite something like this, 11.7%, and be like, all right, well, let's each give a little and just consummate the deal and get it done. That wouldn't be the worst thing in the world.
Yeah. I hope it gets done this summer and doesn't drag on for, a year or whatnot. All right, let's go to Q&A. We've talked enough. Let's try to get 20 minutes of Q&A in here, and Alec will post up the questions. First from Tesla Tiderium on Twitter. Elon has been tweeting his positions on divisive issues and his preferred candidates. Will this affect Tesla's brand or demand? First, I would say he's not necessarily tweeting about preferred candidates. I think he's saying he's going to vote Republican in general this midterm election. He's not endorsing specific Republican candidates, to my knowledge. I think he's just saying the leaders of the Democratic Party have been kind of villainizing him, and so he's more tempted to just go on the Republican side this midterm election. And I'm glad Elon is being more transparent, because you get to such a level of influence, it's impossible to just dance around politics and not be involved. At some point, he's going to be dragged into the conversation. He can, I think he's just being real, and that's okay to me. Like it's better than him just avoiding it at all costs all the time forever, because he's the most influential person in the world. If not now, will be very soon. I think he is already. So, I mean, these issues are going to come up. He commented on, the AR-15 gun thing. He's on controversial things. He's commenting, and it's courageous of him, because he knows he gets backlash from half the population, no matter which way he comments on this stuff. But, he's a person. He has views, and why not be able to express them in a mature way? And, that's my thought. It may affect Tesla's brand demand by the extreme left people, for example, who are like, oh, I can't believe he's going to vote Republican. I'm never going to buy a Tesla. So like AOC said she's trying to trade in her Tesla now. So that 10% of very vocal Democrats, may not be customers of Tesla, but they don't need that, in my opinion. What are your thoughts, Matt?
Yeah, I kind of agree with you. I mean, there's certainly the potential that you upset a percentage of the fringe, but by the same token, you're probably opening yourself up to a broader population. I mean, I don't know the details on this, but I would imagine that the current kind of population of Tesla drivers lean somewhat heavily on the Democratic side, or at least on the liberal side. So maybe you open that up a little bit with people who thought Teslas were just for like, tree hugging hippies or something like that on the right now. Like, all right, well, maybe this Elon guy's not so bad after all. And so, but I think for the vast majority of people, they don't care about this, and they're not paying attention to Elon's tweets. I'm sure some people hear some things anecdotally and think he's a little bit weird, but I think that the driving experience is probably what counts a lot more than any of this. So I think it's going to be a small impact, if any.
Yeah. Next question from Benmi Buba on Twitter. Do you have any information on the progress of the 4680 battery production rate? I personally do not. I know the limiting factor. He's really up to date on a lot of this stuff. And Troy Tesla keeps close tabs on this stuff. There's a number of like sort of battery experts that we follow, but I have not seen a recent update. I would encourage you to kind of locate some of those battery experts and follow them. Have you heard anything, Matt?
No, I haven't been following that as closely as some others. So yeah, I don't want to opine too much when I just frankly don't know.
Yeah. Let's go to the next question. From Art Twit on Twitter, could Tesla China sales for May still come as a negative surprise on top of the low production numbers? This is the, multi-billion dollar market cap question. Is Tesla going to get cut down by the market, in a week or so, I guess, when the May numbers come out, for China, probably June 10th or something around that, and also for the Q2 deliveries P&D report on July 2nd or July 3rd that comes out. Is Tesla, is the market, are they already anticipating all of this or not? So maybe we'll get a preview of what happens on July 2nd or 3rd. Maybe we'll get a preview, small time to a much smaller extent when the May numbers come in a couple of weeks. You have any thoughts, Matt?
Yeah, I think given how significant the drop has been from 1100 or whatever it was, I think it was 1077, somewhere in that neighborhood, right after the April 20th earnings report to 630 or wherever it got to last week. I don't think that was all macro driven. I don't think that was all Elon Twitter driven, drama driven, as a lot of commentators have said. I think a good chunk of that is kind of Q2 worries that analysts are baking in, and the market is digesting. So I know a lot of us have a tendency to think that we're so much more on top of this, and the market doesn't realize just how bad Q2 is. But I would say that market's not entirely inefficient, and I think the price drop that we saw was at least partially a reflection of uncertainty around Shanghai production in general. So. Could it come in as a negative surprise? Yes, but I don't. My sense is it was baked in.
Mm-hmm. From clips of improvement on YouTube, if average sale prices stay the same and full self-driving is near perfect, and there is a 90% take rate, why would a 45% gross margin not be possible, assuming more efficient factories? I mean, I think, Matt. What do you think? I think 45% gross margins is possible. What do you think, Matt?
It is. It sounds crazy. I mean, I was listening back to Dave Lee conversation I had with him earlier this year about the crazy margin potential of all this stuff, especially if full self-driving takes off. The one maybe caveat I would throw in there is, to the extent that it's subscription-based full self-driving, it may take longer because if you were just selling $12,000 packages and they're fully recognizable, which they're not right now, so keep that in mind also. Yeah. But if it was near perfect, my sense is a bigger chunk of the sales would probably be subscription based, and so then over time, as you accumulate a lot more of those subscriptions, it'll probably take off, and you could have sustained 45% plus gross margins. But I'm not sure exactly how that'll shake out between FSD sales and FSD subscriptions.
Next question from Michael on the YouTube comments. Once full self-driving is proven, will governments promote its adoption similar to how they offered EV tax credits? That's a great question. I think in the US, it'll be a state-by-state thing. First, you'll see a couple of municipalities maybe promote it to kind of attract industry for this new technology to their kind of city or municipal region. And then other municipalities will catch on. So Miami might be one of the first ones, for example, or, Arizona, Scottsdale, or that other place in Arizona that everyone's full self-driving. And then I think you might see certain states come on board with some kind of endorsement. And I think internationally, you might see a faster, even though Tesla's full self-driving is more fitted for US roads at the moment. I think when it gets to a certain point in the S curve where it's like really good in the US roads, it'll be very quick to kind of adopt it to or fit it for roads in Europe or even China or other places. I think the technology will be there to like speed up the fitting process, where it's not a 2 or 3 or 4 year process. It's more like a 6 month or 3 or 6 month process. And then some of those other countries may even be more aggressive about trying to encourage the adoption of full self-driving. That's my own prediction. Matt, you have any thoughts on this?
No, I think it could go that way. I mean, seatbelts were mandatory eventually, but it took a lot of time. Like one other way to look at it is like the CAFE standards, which is the fuel economy standards. That's kind of like a top-down approach. So they could just require a certain percentage of each manufacturer's vehicles to be, full, like autonomous or something like that. So you could see something like that, but I think I think Tesla's going to want to do the right thing in terms of like getting it into other OEMs' hands. So there's a possibility they could even license it at a probably lower than optimal price for Tesla, just because it's like the right thing to do from a safety standpoint. So, I don't know exactly how it'll pan out. I think there's going to be some pockets of government that are going to be pushing against it, even when it like becomes clear that it's safer, just because the government doesn't seem to make any sense these days. But I think ultimately it's going to be hard to argue with the stats. And so it'll have some, in the long run, it'll have some sort of regulatory push. I just don't know how it's going to pan out.
From Arthur Blake on YouTube, question: what is the chance that Q2 actually surprises? Everyone thinks it's going to be a big letdown, but Tesla has surprised in similar situations in the past. I mean, I think there could be a bit of a surprise. Like, instead of people are expecting maybe 250 or 255 come, the production delivery print, maybe they show 265 or 270 somehow. That's the highest I think the upside would be is, 10 or 15,000 more than what Troy Teslike is suggesting, for example, and others. So, I don't think a surprise could be more than last quarter's production, but we'll see how June goes. I mean, June is a full month, so a whole third of the quarter we have left to go. If Fremont still is on all 4 cylinders, a slight improvement to last quarter, let's say, production wise, but then Shanghai is getting back to full steam for June. Maybe Shanghai's even outdoing what it did the third quarter of last, maybe what it did in March, possibly. So Giga Berlin and Texas, I really, I think we'll know quickly if they start ramping up, but I haven't seen any evidence to show that Shanghai or Berlin or anything, are very meaningful yet in production. They're still kind of getting their lines situated, I feel like, and supplies are a bit constrained over there, maybe. What do you think, Matt?
Yeah. No, I agree with you. Like, I'd be totally shocked if they did 270. Now, I was totally shocked that they did as many in Q1 as they did. So there's potential that there's just some crazy wizardry going on. But I'm not at all expecting that. Where I do think there's at least the potential to surprise a little bit is in the financials. And again, I'm not expecting that. Like, I keep going through and adjusting my model, and I'm kind of getting somewhere in like the 210 to 220, earnings per share range. So significantly down from where we were last quarter, but still not a terrible situation, all things considered. But I think we're at a point where it's hard to really model it out at this point. You've got your highest margin factory is down for a decent amount of time. You've got price increases rolling through. You've got 2 new factories that are highly underutilized, which are presumably going to be a drag on gross margins. But then you've got weird things like the services, credit from the leases that are coming back. So trying to like get a read on how this Q2 is going to print is probably one of the trickiest exercises we've had so far, is in trying to peg it down. So my sense is, there won't be a beat. I mean, Wall Street's pretty close to what I'm estimating right now. So my confidence level is low that there would be a beat, but you wouldn't have to change too many variables for the numbers to look pretty good. And then there's always the potential that they could like recognize a portion of the deferred FSD revenue, for example, or maybe full self-driving take rate really is increasing now that the functionality is so good. I mean, there's 100,000 people using it now. That's kind of nuts. So I think they have a strong case to be made to their accountants that they could start to recognize some of that revenue for 100,000 vehicles. I mean, you think about 100,000 vehicles that you've actually delivered the functionality to now. And if they have an average carrying value of their full self-driving of like, $5,000 or so, then, that's what, $500 million of deferred revenue that they could recognize. Now analysts might back that out, but the point is, I think there's a lot of weird levers that could be pulled this quarter that I'm just not sure how they're going to shake out.
Next question from Liasio on YouTube. With oil and gas going up again in May and June, I fear CPI delayed data will go up again in the next few months, which may cause another drop in the market. Thoughts? Well, I think there is some fears of that, but I think housing prices kind of coming down and used cars prices coming down. I think there's some offsets going on, even though oil and gas are going up right now. So you have to kind of look at the entire, universe of the products used to calculate the CPI. I guess I'm not an expert on the CPI, but from a conceptual standpoint, it seems like there's a lot of there's a lot of mismatches and everything's not correlated in exact time with what's going up at the right time. So I don't think that I'm not as worried as I think some people are getting about oil and gas going up right now in May and June. But man, you might have a different take. What are your thoughts?
Yeah, I mean, I tweeted a chart right before this, actually, looking at the rise, like the drivers of inflation. And so like how much have prices increased, year over year. And far and away, the biggest increases were energy pricing. So oil, gasoline, natural gas, and then electricity. I mean, those, like fuel oil on its own increased 80% year over year. Gasoline's up 44%. Electricity is up 11%. Like, food and apparel and all the other things that make up inflation have been much lower. And in fact, like apparel and shelter, medical services were only up, 4 and 5% year over year in April. So when you look at core CPI, which is, kind of excluding energy, and I think there's one other thing that's excluded from there, food and energy, core CPI is actually a lot more modest. And I think the point that Kathy Wood brought up that we spoke about last week of inventories in those kind of categories that make up core CPI have really been ballooning. So there's I think strong potential, at least. I'm not saying it's going to happen, but I think there's strong potential for deflationary pressure on all the areas of the economy, maybe not all the areas, but on many areas of the economy that are not commodities driven, especially like energy price driven. So I think there could be a break in that at some point. I don't think there's any let up in oil and gas, but I think the market, like energy prices are apparent every day. Like, so I think the market's not going to miss what's happening with the price of oil or like what's going on with Henry Hub prices for natural gas, which are the highest they've ever been, at least in the last 15 years, like $8 an MMBTU, crazy high. So the market's clearly looking at that and saying that's not good for inflation. But I think the other areas are probably harder to predict, like what's going on with like apparel and groceries and all those other things. So bit of a rambling answer, but I think there's potential that at least core CPI may not be as bad as some people might be expecting.
All right, next question from NozTube on YouTube. What is the probability of Rocket Lab getting delisted if the stock continues to fall? That's a good question. I mean, I think the stock has been falling along with all the growth stocks and SPACs, especially. Last I checked, Rocket Lab's market cap was around 2.3 billion valuation, just trading under $5. But you have a lot of other space SPACs trading well under $5 for a long time. I think some are trading like $1 or $2, and they have like in the hundreds of millions of market cap. Those types of stocks would likely get delisted well before Rocket Lab ever was required to be delisted. I don't even, they could always do a reverse split if it's a share price, nominal share price thing on NASDAQ has to be over $5 a share. But I think that only counts if the market cap is under a certain amount, like 200 million or something like that for an extended period of time. I can't remember the exact rule. I used to when I took like the Series 7 many years ago, but maybe that rule's changed. But I'm not worried about Rocket Lab getting delisted. No, that sounds like, if that's someone's writing about that, to me, that sounds like FUD, someone who's short the stock trying to get other people to jump ship or something. Yeah. Anyway, Next question.
Yeah.
Could be wrong. Do your own investment research, of course. We have a disclaimer at the beginning. From Ben Sizz on YouTube. On Goodsill, general investor, if you never sell Tesla, how do you plan to get a return on investment? Never is a long word. I mean, never. I would never. I would not say you would never sell Tesla. I mean, we're talking like 10, 20 years from now or something. You know, Tesla could be 100 times worth what it is now potentially. You never know. I mean, so at some point you could sell Tesla. You could also sell covered calls at some point, or Tesla will eventually pay a dividend, in my opinion. I mean, you could start buying back shares as well, but I think at some point down the road they would pay a dividend, just like Apple pays a dividend now. So people who've held Apple for a long time, even if they're still holding Apple, they're getting a return on investment through a dividend. Or same with a lot of companies that have been around for a long time. Any thoughts, Matt?
Yeah, I mean, since they mentioned good soil, I would just say, investors, can ask for a distribution, at any point, so they can liquidate their share, and then
Yeah,
it's not necessarily our mo to dictate when investors get their money back. I mean, there's certainly that that we it's not like we're a venture capital fund, for example, where we have illiquid investments and you only get your money back when we say that we're selling.
that's true. Yeah.
The price. So there's that form of liquidity, which I think alleviates that particular concern that Ben laid out. But generally speaking, though, I agree with you, though, Emmett, that I think in the long run, I think dividends are probably going to be the biggest source of kind of like return on capital for Tesla. But then, of course, you could sell.
Yeah. I read that question wrong, but you're absolutely right. I was thinking, like, if you're just an investor in Tesla long term and you're following what we're doing or whatever, and how do you get a return on investment? So anyway, good. Let's do one more question, and I have one comment I want to talk about, the Jackson Palmer thing I forgot to talk about that came up. So one more question. Yeah, one more question is, with the recent market sell-off and potential further selling, any names that you guys are considering for the fund? I mean, we're always surveying, looking for other names. There's other names on our radar. Currently we're in the, heavily in the 4 stocks. We talk about Tesla, Roblox, Lemonade, and Rocket Lab, and we're still big believers in those 4 names. Our highest conviction in Tesla by far. And they've all been hit hard. And there's lots of great companies out there. We just have limited bandwidth to research all of them. And if we can't personally understand, like so many people have sent us Palantir over the years or Snowflake or whatever. And I just, I've looked into them a little bit, but I just personally can't spend enough time to really feel like I have a good understanding, other than other people who I think are smart buying those stocks. And that's a trap for me. If there's other people who I think are smart are buying a stock and talking about how great it is, but I personally can't understand it myself, that's like a trap for me not to invest in it. I might be missing out on a winner, but also I've lost a lot more than I've gained over the decades of investing by trying to follow other people. So we just haven't had enough time to study a bunch of other stocks, but we have a lot on our list. Anything you want to add to that, Matt?
Yeah, well, I completely agree with everything you just said. I mean, the only thing I guess I would add is we do believe that there is some value in concentration. So we're much more concentrated as a fund, and I suspect many of our followers are as well, just from the commentary I've seen on Twitter of how concentrated people are in Tesla in general. But for like a hedge fund, or for any type of fund, really, we are very highly concentrated. I mean, to really just have 4 core names is pretty much unheard of. But I think for this particular moment where we are in history, and with the caveat that it's with the appropriate risk appetite, and we are very kind of upfront with our investors about the risk level of the fund itself and our use of derivatives and everything like that. But what I would say is, with the technological breakthroughs and the way that markets are changing this decade, in my mind, not investment advice, but I think there's going to be outsized gains in a very small handful of stocks and of names that can kind of take advantage of the technological disruption that I think is coming. And so I'd rather stay concentrated in a smaller group of names that I can, follow the developments very closely. And then if things change, or, if other companies, like we were saying earlier, have a better risk reward trade-off, and of course we'll, switch. But I think if you're trying to have a group of like 20 names that you're trading or managing that portfolio, I don't think it's possible unless you've got like a huge staff of people researching it. I don't think it's possible that you can really understand what's going on in depth with each one of those companies. So I personally just feel like I'm being a better steward of the resources that we have under our watch when, it's a smaller group of companies that I know inside and out.
Yeah. And speaking of that concept of not being possible to know there's the concept of grifters. And this guy Jackson Palmer, who's I guess a co-founder of Dogecoin, he's calling Elon Musk a grift. He says, "quote He's a grift of Elon Musk." He says, "After I gave him the script, I was not a fan of him. He's a grifter. He sells a vision in hopes that he can one day deliver what he's promising, but he doesn't know that. He's just really good at pretending he knows. That's very evident with the Tesla full self-driving promise." That's the quote of I that stood out to me from this guy in this interview. So apparently Jackson Palmer is a heavy skeptic of Elon. Maybe he's a little bitter because he's probably been shorting Tesla or something. I don't know. But he tells a story of, and Elon and him has gone back saying that his code is not good. Why doesn't he just open source his code if it's so good? So Elon's trying to bring light to the problem. So Jackson Palmer is giving his side of the story in this exclusive interview where it doesn't even allow the interview doesn't even ask Elon for his feedback. And instead Elon takes to Twitter and says, "Well, if it's so good, your code, why don't you open source it here on Twitter for everyone to see, to decide?" And so I love that Elon is trying to just shine light on this stuff and open things up. Like people claim so many terrible and nefarious things about Elon, but Elon is all for transparency and just shedding light on this stuff so that people can have enough information to decide for themselves who's right and who's wrong. It would be great if Jackson Palmer, maybe he will let up his, show his whole code on Twitter for everyone to see if it's actually some brilliant code for getting crypto scam bots or not. That's, I don't know. It's just frustrating when you see the media pick up on the few people that, have it in for Elon and try to sensationalize that. It's frustrating, but Twitter, I think is a great avenue to kind of bring this stuff out quicker so that Elon can question to the whole media, like, have this guy put out his code if he's so confident that it's some special code that I couldn't understand. So what do you think, Matt?
Yeah, so I hadn't listened to the interview that Jackson Palmer had, but yeah, I mean, it's like you can like scream about Tesla or Elon and you're immediately going to get picked up on in like a broader, it's like a lightning rod. And so if you want attention, you just scream Elon Musk or whatever. So does he actually believe what he's saying, or is he just trying to get attention? I don't know, but yeah, like if you truly do have something that's that amazing, it's really easy to get the credit that you think you deserve, right? Just share it and people say, "Oh my gosh, Jackson Palmer really is amazing. Like, thank God for him solving crypto bots." So like, put up or shut up, I think is ultimately like what you need to do. I mean,
yeah. And just so you know, this crikey Australian website, I don't know anything about it. My guess is they're, very left leaning and upset with Elon for, saying he's going to vote Republican, even though they're based in Australia. And the way this interview, it's not an audible interview. Okay. So these interviews, just so you know, it shows like Crikey is asking this question. So Crikey, the company, is asking this question, and Jackson Palmer has a long-winded answer. This is not likely an audible interview that they wrote down the transcript for. Otherwise, they'd publish the audio. More than likely, Crikey, or maybe Jackson Palmer paid Crikey to say, "Hey, I want to put out an article in an interview format." And then, or maybe Crikey came to Jackson Palmer and said, "Hey, would you do an interview format article for us?" And then Jackson Palmer, what he can do is he can write down the questions he wants to answer himself and make it look like Crikey's asking him these specific questions. And then he can write down his long-winded answer the way he wants it to be written. Yeah. So that's what happens in a lot of these written interviews. I was part of one once a long time ago. If you Google Emmet Peppers and shedding light for order on payment for order flow, that I did an interview like that once, and that's how a lot of these interviews on the web are done. When you're trying to market your position, I was trying to explain payment for order flow. This was years ago on Wes Gray's website, actually, in an
Oh,
interview
really?
format. And he just suggested, like, hey, why don't you write down the questions and the answers, and we'll publish it. We'll look it over and make sure we agree and publish it. So I'm guessing that's what happened here. It's just this guy Jackson Palmer basically writing an op-ed, but he's writing in an interview format, so it looks like someone's asking him the question. So it seems more credible. That it's a trick. It's like a mind game when you put it out that way, in my opinion. So it doesn't seem very authentic. I'm very suspicious of this person.
Yeah,
Anyway.
I mean, my sense is he's got his 15 minutes of fame, and like I hadn't heard of him before today.
Yeah.
And I have a feeling like
Now,
2 months from now, if you're like, "Oh, Jackson Palmer, what are your updated thoughts on him?" We're like, "Who are you
yeah.
talking about, Emmett? I don't
Yeah,
remember that
yeah,
guy."
yeah. Well, you know what? Maybe AOC or Bernie Sanders and Elizabeth Warren are like, oh, here's a friend in the tech community we can reach out to, help out with stuff or whatever. Who knows? I don't know. He's probably he's just allied with, the fringe, on the left that probably is, he's talking about Republic. If you read the interview, it's clear he's an interesting character. Anyway, that's it for this week, guys. We'll be on next week, same time, same place. And Matt, have a great day and week. And let's hope Tesla, I guess everything's staying flat today. Tesla's about flat, 762. So we'll see what happens. Is the market going to be trading sideways, up or down? I guess anyone's guess. So it's the people that be very wary of the people who are even credentialed to economics, who kind of show some kind of like confidence with where they think the market's going. Just be very skeptical. Anyway, we'll leave it at that. All right, guys. Thanks.